Hello traders, are you tired of getting caught in false trend reversals? Well, the super trend indicator is great, but what if I told you that there is a way to make it even better? Well, in this particular video, we're just going to be diving into the liquidity weighted super trend indicator. It's quite a powerful upgrade that improves trend signals by factoring in market liquidity. So let's just quickly add the indicator to the chart right now. The liquidity weighted super trend indicator. Now, before we get started, make sure to smash that like button, subscribe to the channel, and turn on notifications so you never miss out on the best trading tools and strategies. Okay? Now, the classic super trend indicator is one of the most popular trend following tools in trading, right? It helps traders catch momentum shifts by plotting trend signals based on price action and volatility. But here's the issue. The traditional super trend signals do not account for liquidity, which can lead to false breakouts and unreliable entries. Meanwhile, the liquidity-weighted super trend indicator solves this by factoring in market liquidity, making trend confirmations much stronger. Okay, so now, how does this upgrade actually work? The liquidity-weighted super trend analyzes trading volume and liquidity levels alongside price action to filter out weak signals. So basically, when liquidity is high, the trend signals become more reliable. When liquidity is low, weaker trends are filtered out, reducing the chances of false reversals. So this allows traders to focus only on high probability trade setups and avoid noise in the market. Now let's just quickly talk about the settings of the indicator before we jump into buy and sell setups. Okay, for this indicator, the liquidity weighted super trend, it can actually be customized, based on your trading style. If you are a day trader, you can actually, decide to, if you're a day trader or a scalper, you can actually decide to use lower values, with higher liquidity filters. That works best. Then if you are a swing trader, a balanced settings, balanced liquidity sensitivity will provide stronger trend confirmations. Why so? But basically, you don't necessarily need to change the settings though. Okay. Now, how do you actually use this indicator in live trading? Okay. So basically, as you can see, these green lines serve as dynamic support. The green lines serve as dynamic support, right? While the red lines serve as dynamic resistance. So basically, whenever price gets rejected around the green line, it means it's time to buy. When price gets rejected around the red line, it means it's time to sell. And you can see that the lines also displays, an arrow, right? So this gives you a precise entry point for a buy, right? If you enter a buy, you can consider setting your stop loss below the previous swing low. Your take profit can be at the resistance zone, right? And you can see in this particular scenario, it gave us a precise entry for a sell. So if you enter a sell trade, you can set your stop loss above the swing high, and your take profit can actually be at support zones. All right. So that is how to make use of this indicator. Quite straightforward. Okay. The indicator can also help you to confirm trend, the prevailing trend direction, and of course reversals. You can be able to identify reversals, but I'm going to recommend adding price action to it. For example, you have price making higher highs and higher lows, and then suddenly you realize that lower high was being formed. Now, once that lower high has been identified, any sell signal that comes after that could be a good time to enter a sell, because right after this bullish structure has been broken, a possible bearish reversal has begun. So when a new lower high forms, it could be a sign, a time to enter a sell, right? When you enter a sell, make sure you get your confirmations, okay? Candlestick patterns. watch out for candlestick patterns. For example, look at this bearish engulfing, right? So you watch out for candlestick patterns. When you enter your sell, you can set your stop loss above the previous swing high. The take profit can actually be at support zones. You can just ensure that you have a good risk to reward ratio. Okay, it's very important, very, very important. All right. So using this indicator is quite straightforward, right? So that is for a sell. All right, now this is for a buy, a bullish reversal. You can see that price was initially trending downwards, and suddenly we had a breakout to the upside. You can see how price broke out of this bearish trend line, and then even we tested it around here, and you can see this buy signal appeared. So this was a time you actually just have to confirm, okay, confirm the signal, right? You can see that we had bullish candles. You can see these three white soldiers. Right after the three white soldiers, you can enter your buy trade, and then you can set, if you enter a buy trade, you can set your stop loss below the previous swing low. The take profit can actually be at resistance zones. Okay, so it is very, very, important to take note of price action. Watch out for candlestick patterns, watch out for chart patterns. It's very important because they help to confirm the signals given to you by the indicator, in this case the liquidity weighted SuperTrend indicator. All right, now concerning risk management, I need to emphasize on that because you might have a good and working strategy, but if you do not have good risk management practices in place, you might end up blowing your account. You might end up losing a lot of money. So make sure you always observe good risk management. Do not trade with an amount you cannot afford to lose. And when you are trading, while you are trading, make sure that your risk to reward ratios are good. The minimum risk to reward ratio I recommend is 1:2. If you are risking 1 pip, your potential profit should be 2 pips. 1:2 times 2 of what you're risking should be what you want to make. And then make sure you set realistic targets, right? So if you are risking a particular number of pips and you are entering around here, if times 2 is giving you something that is way beyond the resistance, then that's bad. All right, make sure that your take profit do not exceed a key resistance because price might reverse before getting to your take profit. So make sure that your take profit does not exceed a key resistance for a buy trade, and make sure that your take profit does not exceed a key support for a sell trade. All right, it's very important to take note of all these things. So there you have it. The liquidity weighted SuperTrend indicator is a major improvement over the classic version, helping you filter out weak signals and confirm trends with more confidence. So what do you think? Will you be adding this indicator to your trading setup? Let me know in the comments. And don't forget, if you found this video helpful, hit that like button, subscribe, and turn on notifications so you never miss out on more powerful trading strategies and tools. Thank you for watching, and I'll see you in the next video. Happy trading.